Bharat Forge faced a challenging June quarter as global and domestic auto industry went into a slump. Being a major exporter of auto parts, Bharat Forge had to brace for multiple headwinds in the international market as well. To give us more details about the quarter gone by, joining us on the phone line is the Deputy Managing Director, Mr. Amit Kalyani, and take this conversation further is Yatin Mota.
Thanks for that, Devina, and thank you, Amit, for speaking to Bloomberg Quint on your quarterly earnings. Let me begin by asking you about the domestic market. Given the fact that there has been a slowdown, most of your peers, auto ancillaries, have been taking production cuts. So, what exactly was the first quarter domestic performance? And also, if you could tell us what exactly are you doing in order to destock your inventories or adjust production accordingly with the demand trend that is there?
First of all, we do not build and carry inventory. Okay, if we do so, it's only because we have, going to take a shutdown on plants or equipment or whatever. So we don't build inventory and keep. Second is, there has been a very strong consultation process going on between the government and a large part of the industry. Right from the suppliers to the two-wheeler OEMs, the four-wheeler OEMs, the commercial vehicle companies, the agri companies, the dealers, the financiers, everybody has gotten to the act in placing their problems before the government and trying to get some support in terms of boost to the demand side. Hopefully with Diwali around the corner, something should happen. And even if not, I honestly believe that the truck side, the heavy commercial vehicle sector, whatever inventory overhang is there should be over this year. This quarter, and from next quarter onwards, it will be built to sell. Even in the latter part of this quarter, it should be built to sell, and then obviously the quarter after that is going to be the transition quarter, because BS6 will be applicable from 1st April. So everybody will want to liquidate their stocks. Nobody will want to do it last minute because then they might have to resort to discounting, etc., or some other disposal schemes which may not work. So that's my personal belief. And there should be some positive sentiment, I think, created by the system, either through liquidity or through some demand side activities or some infrastructural activities, which should lead to a little bit of demand pull.
And Mr. Kalyani, what about the Class 8 truck orders? We have been tracking the trend which has been down, and more importantly, the research institutions in the US have been talking about how Class 8 truck orders are expected to remain under pressure. What is your assessment of the ground situation, and how do you see this piece moving for Bharat Forge in the North American operations?
There is there's a forward booking of orders. So the forward booking of orders is till the end of next year. Orders that are coming in at a lower rate. But there is still a fairly robust order pipeline for next year. Should be in the similar range as this year. This year as a similar range as last year. And honestly, given the geopolitics and given everything right now, I don't think even in a mature market like the US, you can look beyond 6 to 8 months.
And Amit, how do you see the oil and gas segment moving? I was looking at your investor presentation. There is a clear mention about how destocking is happening in the oil and gas segment, and that has adversely impacted your first quarter earnings. So if you could just provide an outlook for the oil and gas segment as to how that segment will perform since the destocking has happened in the first quarter. So
actually on the oil and gas sector, we do have some good news. The destocking is tapering off, and in fact, we will see revenue this quarter higher than last quarter, and hopefully next quarter higher than this quarter.
Okay. And what about the capex requirement? Are you spending any particular amount on capex for the defense business, for the oil and gas forging business?
We have already a large capex that is going on between last year and this year, and I don't think for the next 2 years at least we will spend any capex.
Okay. And what about the defense segment, in India? How do you see that, piece moving? I was speaking with Baba Kalyani, last time, and he said that probably in FY20, second half, we could see some good defense orders moving in. So what is your outlook as far as, revenues from the defense business is concerned?
hope is always there. So we have lots of irons in the fire, and there are some amount of let's say programs where we are at an advanced stage of trial, and hopefully that could translate into orders. But notwithstanding that, we do have a revenue business which will continue to remain at a similar level as last year, and we have in our joint venture one order, and so on and so forth. This will continue.
And Amit, please guide us for the second half of this financial year. How do you see it moving, especially in the second half? We have seen a slowdown globally when it comes to autos. Domestic also the situation is not improving. So in the light of that, how do you see the second half for Bharat Forge?
Better than the first half, for sure.
Okay, thanks for that, Amit. So that was the management of Bharat Forge. Expects that the second half could pick up significantly, especially for the oil and gas and the defense business.
All right, Yatin, thanks very much for that. So that is Bharat Forge and the management commentary for the Q1 performance. Moving on, India's consumption story has been one of resilience, but the last 2 quarters have been somewhat different. Growth has been slowing down, and that's reflecting in the numbers of all FMCG players. So will this resilience prove enough to get consumption growth back to double digits, or is the drop more structural this time around? We pose these questions to someone who has helmed one of India's oldest FMCG companies, Britannia Industries. Vinita Bali, she's joining us right now on the show. Ms. Bali, thanks very much for taking out the time. We had this conversation a few months ago, and the slowdown at that time didn't surprise you. You said it was writing on the wall, and it's just that we're getting to see these figures and the volume cuts that most of the industry is seeing just right now. Has anything changed materially? Is the weakness still predominant according to you?
Hello?
Ms. Bali, can you hear me?
Yeah, I can. Sorry, can you just repeat the question? You went off a little bit.
Okay. No, I just wanted to get your sense of the situation right now. When we spoke a few months ago, you were pretty aware of the slowdown, and you said that it's going to take some time for the industry to come back into form. What's your gauge right now on what's happening on ground?
I think what we said the last time is what we're actually seeing, that the slowdown that we first saw in the rate of growth of GDP. In fact, this year, every quarter, the rate of growth of GDP has come down, and that ultimately reflects in how people feel, which ultimately reflects in how people spend. And we are seeing the effect of that. So it shouldn't come as a surprise to anybody that we are where we are. And the key question really is, so what are some of the things that have been done structurally to stimulate? Now, having said that, within all of this, I would also say that there are some companies, including an FMCG company who declared its results yesterday, which has actually shown a very good 11% top, volume growth, almost an 11% volume growth. But I think in general, it is fair to say that what we are witnessing now is the result of a trend that at least some of us had started seeing 4 quarters ago.
Ms. Bali, so if you saw this 4 quarters ago, what's your sense of how tough the trend has become? Because when we hear some of the existing business leaders talk about people or consumers thinking before spending even 5 rupees on a product, it brings to the forth the kind of question marks that people might have in terms of their confidence on the economy.
That's exactly what I said. People spend when, of course, they have money, and secondly, when they are feeling good, when they're feeling confident, when they're feeling secure. So there are several things that are changing. I think, to be fair, we've got a global environment which is not helping sentiment either. So when you look at what is going to spur India's growth, it is either consumption at home, or it is the effect of an investment that has taken place, or it is higher exports that are bringing in higher revenue. And on none of these factors have we seen any improvement. In fact, if anything, We are seeing an overall deterioration in the sentiment as far as the global economies are concerned. The India consumption story has been challenged. We talk about rural. Now, just to give you a very concrete example, take construction, which employs a very large number of people. A large number of those people come from our villages. In fact, if you go to villages in India now, there is at least one member of the family who is somewhere in some city working on a construction site. The real estate industry is in a challenge of its own. Construction activity has come down, and people are coming back to the rural areas because they don't have work, and therefore they don't have income in the urban areas, which is where they went in search of work in the first place. So I think we also have to remember that the dynamics of our economy are so interconnected that what is happening in one sector obviously has an impact on every other sector. Take services, for example, which make up over 7 or 7.5% of our GDP, which make up almost 55% of our GDP. The rate of growth in services has come down to 7.5%. So you say, okay, young people who are employed in IT, etc. There is also this looming fear now, will I keep my job, will I not keep my job? We talked about the automobile sector, that impacts everybody who's a supplier to the automobile sector. So that dynamic effect in the economy is what we are seeing now. And, whether it is something that is non-essential, which I can reduce consumption of, or whether it is something that is non-essential that I can postpone, those are the choices that people are making. And we are seeing that reflected in the numbers.
Ms. Bali, so obviously while the core theme has to be that it is going to be a growth-led consumption story, from an individual company's standpoint, how can one look at spurring the demand and creating demand? Obviously, do you feel that companies then have to look at sacrificing margins a bit to make sure that they can get that volume nudge? Do you feel that distribution needs to become better, or distributors need to be given a better margin, which all have an impact on the P&L, but will in turn lead to spurring demand and creating that volume push?
I would say in many ways, companies have to move from lazy marketing to, really activation of their brands and their brand propositions. I think what happens in an economy like India, which has a certain momentum, is that, a rising tide works well for all ships. Now, when the challenge occurs, those companies that have focused on the consumer, that have focused on all the things that you've just said, on distribution, on price points, on range availability, on making their products meaningful and relevant in the lives of their consumers, those companies will differentiate themselves far more than any other company. And let's face it, in every sector there is increasing availability, and therefore the consumer in many ways is spoiled for choice. So this is the time that companies have to really make trade-offs and choices between, volume growth, margins, momentum. Investment is another thing. The economy is not going to stay like this. So if companies postpone their investment cycles, well, that's not going to work in favor of the economy either. So I think companies, management, the market, investors have to take not just a short-term view of what is happening, but also a medium and a long-term view. Because as we always keep saying, the potential of India is never in question. It is how soon will we get there and what is the momentum which will take us there.
So is there merit in thinking that there could be a different strategy that could be adopted in a period of slowdown, where you push those low unit price packs out into the market? They'd probably get a better response than someone who has to shell out a lot more money.
Yeah, there are 2 or 3 other considerations as well, and that is that, and I think people have heard me say this. The beauty of operating in India is that virtually at any price point, you have a significant number in the absolute of potential consumers and customers. And therefore, I think companies have to get more focused. Companies have to get more relevant to the consumers. Companies have to make sure that products are available when consumers need them. Now, this will not work the same way for every company. But I think even in the kind of situation that we are in, companies that respond to the situation in a dynamic manner. And let me tell you something very specific. I worked for many years for the Coca-Cola company in Latin America, and we did lots of studies. And one of the things we found is during a recession, actually companies tend to reduce their marketing spends because everybody's bothered about the bottom line and so on. That is exactly the time when you have to do a lot more to spur demand and spur consumption. So I think the conversations in companies as well as in the boardrooms also have to shift a little bit more towards what more needs to be done to spur that consumer demand, because in the absence of that consumption, you cannot cut your way enough to profitability. And if you see the results that we've seen for this quarter, I was looking at the numbers out of some 2,400 companies that have already declared their results. We're only seeing a top line growth of 8%, and we're seeing a profit decline year on year. It's a little bit better quarter on quarter, the profit, but the sales are not that better quarter on quarter. So I think every company has to come up with its own dynamic mix of, how much margin, how much volume, and, what am I going to do now to secure the medium and long term? We can't have a great short term, a great medium term, and a great long term. That is fairly obvious.
All right, and it's going to be an interesting watch, since you mentioned how these companies have performed on a year-on-year basis. Now that you've got the base revised from last year where the slowdown actually started, you may actually see those numbers looking slightly better this year onwards. But Ms. Bali, thanks very much for joining us. Really appreciate you taking out the time and speaking your thoughts here with us on Bloomberg Quint.
Thank you. Thank you.
All right, that is Vinita Bali with her thoughts and what's been happening in the FMCG space. But Manappuram Finance has reported a strong profit growth in the June quarter. The management is confident of achieving an overall growth of nearly 20% despite the flood situation in Kerala and Karnataka. To help us decode the numbers, joining us right now on the show is the MD and CEO of the company, Mr. VP Nandakumar. Also joining us from our research team to take this conversation forward is Shefali Malik.
So I'll put across this question to Mr. Nandakumar. Sir, your profit is up 36%. So what went into your earnings this time, and do we expect this momentum to continue going forward as well?
Yeah, I hope so. We are trying our level best, and we have a projection of. We have an internal projection to achieve a CAGR of 20%. So we hope we'll be able to achieve. But at the same time, the macroeconomy also play a role. But still, we are hopeful.
So how much were your margins during the quarter and the growth in your assets under management?
Yeah, we have crossed 20,000 crore mark already. The NIMs are protected. There had been a slight increase in the cost of borrowing, which we could be successful. We are able to successfully pass on. So in the major businesses, microfinance, there is a NIM cap of 10%. So whatever is the cost escalation, that is passed on. In other businesses also, so far we are able to pass on. So NIMs are well protected.
So how was the performance in your subsidiaries this time around? I see a very strong AUM growth in most of them.
Yeah, now the gold loan portfolio has come down to around 65%. Nearly 20% constitutes microfinance. Around 7% is vehicle finance, nearly 3% is housing finance. These are the major distribution. So your question is about this is the business distribution.
Sir, gold prices are around the 40,000 mark in the domestic market. So what impact is it having on your business? Are you lending more due to the same?
It will have some positive impact. But see, our average LTV has come down to around 62%, whereas the regulatory cap is around 75%. This indicates that many of the customers are not availing the full LTV. So when the gold price goes up, I hope that LTV could further come down.
Sir, I want to understand a bit about the flood situation. What impact is it having on your business? What's been the assessment so far? And how much of your AUMs and branches are in the affected states?
So the Kerala, the affected districts are around 2-3 districts are affected. These are in high ranges, etc., where our presence is low. All our businesses, the presence is low in high ranges. In Maharashtra, also in those areas, our presence is relatively low. Taking into consideration of our overall AEM, the places where we have the exposure may be around 2-3%. But in the past also, even when these kind of flood situations like flood, cyclone, etc., were affected, we didn't see any rise in NPA. Only a delay of 1 or 2 months. Thereafter, these are getting normalized. So we hope that these natural calamities won't affect our asset quality.
So you're aiming for about 20% growth rate for the full year. So where would this growth come from which segments specifically?
No, the gold loan, our expectation is around 10-12%. We are striving to achieve that. The other businesses will outgrow towards the year end. Perhaps the other business may constitute nearly 40%. That's our expectation.
All right, Mr. Nandakumar, thank you so much for joining us. And with that, it's a wrap on today's Indian Open. Up next is the F&O show.